Hi guys, thanks for tuning into another episode of Nuggets News. It's time we caught up with our friend Charting Man Dan. Last time I think we were talking, it was about preparing for COVID, and you were talking about, having some extra food and whatever, and it is crazy to think what has happened in those last few months. So Dan, did you go into lockdown? Did you go down into your bunker and eat your food, or what's been happening at your place?
Didn't touch the food. I actually loaded up extra. So I've got my end of the world food and loaded up. And yeah, I stayed inside a lot and stayed away from my friends for a long time. And really what I was just trying to avoid was any overwhelming of hospitals. I'm not going to live in fear. I'm going to be taking necessary precautions. But now that we're through a wave and we're not going to see hospitals overwhelmed, at least in my general area, that was my main concern. So I'm ready to go back to living life to a certain degree of normalcy, though there's always something else. Who knows what it'll be next week?
Yeah, and I think everyone jokes about the fearmongers and the living in the basement and whatnot, but I think people, what they saw was you don't want to be running out of food that day when the supermarkets are crazy, or when COVID gets bad, or when there's a riot. And you're joking about the next thing, but I think they're talking about these locust swarms hitting all the crops worldwide. So, oh God, who knows what is coming next for us. But in terms of the markets, I mean, this is just such an interesting time. And I know you were talking about being basically a technical analyst and not worrying about the fundamentals too much. But what is happening at the moment, you've got to acknowledge that it's just fundamentals out the window. We were joking about the Hertz offering shares and saying these are probably worthless because we're bankrupt, but we're going to sell you them anyway. I mean, what is going on in America?
Yeah, it's a wild scenario. We're going to be remembering this for decades, and it's the kind of thing where it just doesn't make sense fundamentally across so many levels. And I've been saying a few times how it really is bringing everything to light, the disconnect. People look at a stock and say, okay, this stock is doing this because Apple is making these products, when in reality, it's the Apple stock is going to react to supply and demand. So these stocks can be, technically, the companies can be going bankrupt, but if there is supply or if there's demand for these shares, then the price is going to go up. And we're seeing, a lot of people at home day trading now. I'm sure your viewers are familiar with Davey Day Trader, who is Dave Portnoy in gaining attention. And he's doing it for the publicity. I don't blame him. He knows he's over the top and he's not taking himself seriously. But we're seeing all these people on CNBC that are taking him seriously. And it's just, it feels like the twilight zone to a certain degree. There's a ton of volatility. There's a ton of trading opportunity. It's keeping control of those emotions and not marrying any individual thesis that you may have that keeps us protected and keeps us from losing our money.
Yeah, and I'm not sure how many Australians do know of the Dave Portnoy guy, but we're a little bit separated over here. But he's got like 1 million followers on Twitter. He just jokes about stocks only ever going up. Robinhood and these no trading apps. I mean, we saw the tragic story the other day of the young kid who woke up $700,000 in the red and committed suicide. What's going on with these apps? I mean, I didn't think you'd even be able to get access to options as a beginner, let alone margin, and they wouldn't let you go into that sort of debt. So we don't have these no-fee trading apps in Australia. What's going on in the US? Have you used Robinhood? How is that allowed to happen?
I haven't used it, and we need more details on that specific situation. It's possible he misunderstood what happened, and it's possible he didn't owe $700,000, which would be a tragedy in itself. But I've always viewed Robinhood as, okay, they're cornering the no fee side of the market. Now everything in the US is no fee essentially, but they were cornering that market, and it was not for serious traders or investors. It's an app that's targeted towards millennials. Hey, you got a couple extra $100, put it in the market. And now we're seeing this rush to that app. And again, I still don't understand why they're choosing Robinhood when right now the fees are the same across the board, with all the other brokers matching pretty much the only thing that Robinhood had going for it, which was those no fees. So it's a phenomenon. We saw it in the marijuana sector rush, and we saw it in the crypto rush. Just a ton of new people flooding in and getting interested. So now this is the S&P 500 and the broader market getting that wave of hype and euphoria. A lot of people are going to learn a lot of lessons by losing money. Absolutely. And that's the way that it always goes. And then hopefully a lot of people will be able to keep some of their capital, learn lessons, come out of it, better off on the other side, and then be able to keep playing this game down the road. But yeah, it's at this point, it's just a a media circus as far as the following that this individual has and how he is taking on the suits, he calls them, in the industry, which I can relate to a certain degree. You know, I've always been against the suits myself to a certain degree, saying, you know, we can learn this ourselves. We have the internet, we have YouTube, we have all these ways that we can educate ourselves. And he's a thread of that, you know, same logic, but on a very different note in terms of, you know, how he's portraying himself.
Yeah, I mean, obviously, as are we, never taking a finance or economics class and being passionate about self-teaching it for other people to go down that rabbit hole as well. Is Dave Putney and other influencers, are they pushing the Robinhood narrative? Like, not on Instagram or TikTok, are they pushing that Robinhood? Do you think that's why all these millennials are going there, or not really?
I honestly, the media is doing it. So I haven't ever heard him say the word Robinhood, and I am entertained by him. I must admit, I don't like that he's going to be leading people. You know, people are going to lose money following him. I don't like that aspect of it. But as far as literal laugh out louds, I do it a lot when I watch his stuff because I know how absurd what he's saying is. But I haven't heard him mention that, but honestly, CNBC and all these other places are putting it in headlines. Robinhood traders, this new phenomenon of Robinhood traders. It's just the way that they categorize a certain age group. You can categorize the age group and the lack of experience by just saying Robinhood traders. And that's now the generalized term to describe this group of people.
Maybe it's the Robinhood, you know, robbing from the rich to give to the poor, all these millennials. But I just think it reminds me so much of old season, and hopefully a lot of our viewers have learnt those lessons as well. But building on top of that, at the moment we've got the US stimulus checks. There's a lot of people in Australia as well that are getting more than what they were previously on. I think that's one of the reasons that people are bored and they're gambling, or sports gambling isn't on at the moment, so they're sort of moving to these other things. But I do see that where this is going is the stock market has some sort of correction, or it loses this froth and the bubbles, and people go, Bitcoin starts moving again. Ethereum, DeFi at the moment is this real buzzword, and all these young traders, it's just another app to them to move over to Coinbase from Robinhood, and there's these bright, shiny logos that are going up 10% a day, 20% a day. That's more than the stocks that were going up maybe 5% a day. And I see this leading into another alt season, alt bubble. And I probably didn't think that was a possibility 12 months ago. I was thinking, where is the retail money going to come from for an alt season? And now we're seeing this play out. I don't know. Does that all make sense to you, or do you think that's a bit of a stretch? I actually think this is really likely to happen now.
The logic is there for sure. What I would need to see for that to be a likely scenario is I would want to see the market, the S&P 500, chill out in terms of volatility. Because I know myself as a trader, as long as the stock market has ample volatility, that's where I'm trading because of fees and because of usability and all that stuff. But as soon as you see that volatility shrink, and then you have the volatility in the crypto space that we all know and love and hate to a certain degree, as soon as that's the alternative, and you know, it takes an individual that has a big following saying, I'm going to get interested in this now, and then start pushing it. So the avenue is there. I just would need to see the S&P 500 get boring. People need to get bored. And as soon as, you know, it's the next shiny object looking on the other side of the street, and I'm going to go trade that stuff and see what this is all about. As soon as the gains come, then the headlines come, then the hype and euphoria comes. So it's going to be very interesting. We've been talking about the S&P 500 correlation with Bitcoin. It's coming and going in terms of its strength. It's not tick for tick anymore. Earlier this week, it was literally every 5-minute candle was looking the same. So I think if that correlation breaks more significantly and the opportunity in percentage gains in the crypto space starts to outweigh what we're seeing in terms of S&P 500 volatility, then you will see a migration, so to speak, of these newer traders just going to the next shiny object.
Yeah, one of the most interesting charts for me at the moment is that M2 money supply, like how much money's been printed and the ratio to the stock market, and it's actually at like relatively sort of median levels. There's a lot of room to the upside. The stock market could go to 4,000 S&P 500, 5,000 I think it was even, and that would be a relatively historical, still normal range. for the amount of money that's out there, the ratio to the stock market. Now, that's also really beneficial for gold. Gold would be going to $3,000 an ounce. And I think Bitcoin, such that tiny market cap, 100 billion, we've now got 7 trillion extra dollars floating around the US. All it takes is a small percentage of people to get through that $10,000 mark, which I know it's a long way down from 20,000, but in terms of the number of days that it's actually ever spent above 10,000, I think it's like 17 or less than a month. So once we get above that, I think it's really significant. Maybe come back and retest it, and then the sky is very blue for crypto. There's a lot of money out there.
Oh yeah, I mean, after 10,500, we've got I think 13,800. After that hurdle, I mean, we're looking right back at that all-time high. It's very, very thin between 13.8 and that all-time high, just around that $20,000 mark. So it can happen very quickly. I mean, we know how quickly this crypto space can turn on a dime, and if dollar volume does come in, then we could see clear 13,800. And I wouldn't be surprised if you told me that it took less than 2 weeks to get back to the all-time high after that.
Yeah, and when you look at just the volatility in the 100x and the BitMEX, the other day when we had to shut down those markets and Bitcoin fell from, 10 down to 5 or 8 down to 4 in a day, that's a $4,000-$5,000 move. And it can easily happen. Like, everyone has this $10,000 and the markets are nice and, volatility's compressing at the moment, but you get a big whack of money. We know that 70%, 80% of people are hodling. Their coins are off exchanges. We know that 20% of coins are lost. It's just such a thin traded actual market, spot market of price discovery that's all done with this 100 times leverage. So, we could spike to 20,000 in a day because of how thin and volatile these markets are at the moment. And that wouldn't surprise me. And then, the next day we're back at 14. So I think a lot of people are fixated on this number on a screen, but once we start off on that trajectory, we can have some wild swings and we might be heading to $30,000, $40,000, $50,000.
Yeah, and as you mentioned, talking about the newer traders who might come over, it's going to be the veterans as well who look at this and say, okay, we've consolidated significantly, the ranges have tightened, let's give crypto a run again. And that's when they'll pour all their money in as soon as they see that, okay, this is the best opportunity. And I have no doubt that the veterans of the space and those with large money and big influence will pick their spot, and they will, it's always just one FOMO hype cycle to the next. And we just saw it recently in Tesla and Nikola, two stocks that, exploding to the upside. And it's just wave after wave. And we'll see it again in crypto. It's just a matter of when. It's taken a long time since that all-time high. But certainly there's not many people in the space that would deny that all-time highs are coming again. It's just a question of when. And that's the standpoint that I have. I'm very patient. I'm not actively trading nearly as much as I was back, 2017, 2018. But I have my funds that are set aside because I know when it happens, it'll be quick. And I just want to have my ability to jump into that market when that opportunity presents itself.
Yeah, and I think a lot of people were saying, altcoins are dead, they'll never bounce back. I was very much of the belief that as long as we have human emotion and money and listed altcoins and leverage now, of course it's going to happen. And it's been funny watching it play through from start to finish, where we've been lucky with our research. We've got on some stuff early and you see it filter through to the starts to be mentioned on Twitter. Some of the bigger YouTubers pick up on it. Then these traders with the large followings are tweeting out these charts. And it's a self-fulfilling prophecy. Like, you can't tell me something like Verge that is just dead. You look at that chart, it's gone through that whole hype cycle, it's based out, a few guys get behind it, it goes 400% in a week. Like, it's not because Verge's fundamentals got better, it's because guys are tweeting about it, and it's just funny to watch this play out. Hopefully the good projects with a bit of fundamentals behind it have more of a steady trajectory and healthy growth, but some of these alts, it's alt season all over again. You can't really deny it.
Yeah, it's again, the game is known. The pump and dump game is known, and it's just going from one to the next. Like you said, the better projects are more sustainable because it's not just an influx of money and then an exit of money all at once. Ideally, it's more of a stair-step pattern and more of a slow trickle in of funds and people that are holding onto that coin longer term. But really what I'm waiting for is just the entire market cap of the crypto space to take a big spike up, because we know that as long as it's just a couple coins that are doing their significant moves, yes, there's opportunity, but as far as that the palpable hype and FOMO that you can feel when the market really gets going. And we're just patiently waiting for that wave to return.
And I think it's really important for people to, like, $10,000 at the moment seems really boring, but it's almost feels like to me early 2017 where there was the people in this space kind of knew that things had bottomed out and were on a bit of an upwards trajectory and were trickling along, and $1,000 felt really boring. And we had another dip down towards $800, $900, I think $700. And then all of a sudden you finally get through 1,000 and you pass that old all-time high. And it's funny to me that we're the same sort of situation now, but just with an extra zero. And all of a sudden, I think we're going to look back and people are going to go, oh, geez, yeah, that was like bottoming at 10,000. And that's quite a significant number if we use that as a base for our next launch.
And gold, to that note, did something similar. Gold was in a 2-year monthly tightening range. And it just got to the point where, okay, we can't get much tighter. We know the break is coming soon. We don't know which direction. We are looking bullish, and then it just followed through. And as soon as we get to that point, which will be coming in the cryptocurrency space, I'm looking at the Bitcoin long-term chart right now, and what I want to be watching is the weekly or the monthly, and it's just slowly condensing. And looking at this monthly chart, there's going to be a big spike in volatility sometime. First half 2021. It's priming itself for that move. And then the traders recognize, okay, I need to be paying attention. The tightening ranges break, and then everybody piles in. So I do believe that will be happening in the crypto space again soon. And that's why my funds, some people would say, well, it's wasted capital if you're literally just having cash sitting there. And to a certain degree it is, but I know that I will be putting that capital to use. It's just whether I'm doing it in 2 months or in 16 months. I don't have that answer. So leaving it alone, and I'm confident that it will reap rewards eventually.
We might have to teach you how to use one of those DeFi apps, Dan, and start to get that 10% annual yield on that crypto that's sitting there dormant. Another thing that I've noticed and learnt on my journey was watching that gold path, as you described. The chart pattern, and gold was boring. It was a pet rock. And the sentiment that marks the bottom, and then the traders start to get interested once it's in that sort of tightening range and there's a pattern that can break out. And you see the day traders, and then the longer term traders, and then the investors get interested, and then it's just, you can see it building, and it's going along that scale, bringing more people into the community, and it just translates. That's more money. The market cap is growing. It's just joining all these dots from a fundamental to a sentiment to a technical. It's just what I love doing, and it's funny to watch it play out in a market that you've followed so closely. And I bought gold and silver and then watched it go down for 7 years, and then it's kind of going back up again.
Yeah, there's definitely going to be some exciting times ahead. We know that much. I mean, we're going to continue seeing things that we never would have expected, and I think that we have a long way to go as far as returning to some normalcy in markets. I can remember, I would never look at the S&P 500 futures chart because it didn't matter. I would wake up in the morning, I would look at what the regular trading hours were doing, and I'd be caught up because nothing happened overnight. And now there's significant moves happening overnight, and the game is shifting, and the more people that want to get in on this game, and the more younger people that get technologically savvy to jump in on this game, the more opportunity that there's going to be, because these people don't have the experience. They will they'll react to things emotionally, and it's those of us that have gone through the cycles that are able to capitalize on that when that does take place.
That's a really interesting point. I definitely watch the S&P really closely now, and even little things like on TradingView, even with the paid version, it's a delayed feed, I think, of 15 or 20 minutes. And so if you've got some of your other services or trading apps, as I do, you watch the live S&P 500, and when it has a move, sometimes we actually get a delayed reaction because so many crypto traders are actually watching the S&P on TradingView. So there's a bit of an opportunity in arbitrage.
Wow, I didn't think of it that way. Because I have noticed that there's been a little bit of a lag here and there, and that would make sense if people, we have in the S&P 500, we have these bots and these algos. They're instantaneously making these correlations and these arbitrage opportunities. But if it is less bots and algos, and it's more traders that are just not as efficient and not on their A game as far as watching live charts, that's very interesting. I'm going to have to pay attention to that more.
Well, for people that have watched the interview to the end, I'll let them in on another little trading secret of mine lately. So there's a lot of ways now you can trade gold, oil, even some of these indexes, either through DeFi, so some of these funky apps straight from your hardware wallet, or some of these exchanges that are starting to list these synthetic products. And there's been a few times when the pre-market, you can see gold is going to jump at open, and these synthetic products, they're pegged to the market. So the market hasn't technically opened, but you can see, and some of these times we've been able to use 100 times leverage when we know it's going to jump 1% at open and make these 100% profits. So this is something that's cool that you can arbitrage at the moment if you know what you're doing. And I'll keep talking about in some more videos. So yes, I'll have to teach you how to do that, Dan. I'm sure that is of interest to you as well.
Absolutely.
Cool. Well, thanks for catching up with this, mate. Anything else that you guys want us to talk about? We'll try and do these semi-regularly again, but there's been a lot happening around the world and everyone's pretty busy, but I hope you've been well, Dan.
Absolutely. I appreciate you having me on again.
Thanks, guys. See ya.